Can we switch gears to transaction?
Sure.
So on this part of the podcast, we talk about a transaction, any transaction that was meaningful for you. It doesn't need to be big. It could be small. It could be with a non-name. It could be on a non-name based. Tell me about a transaction that has some meaning for you.
That's another 12 serious conversation. Because different transactions, and again, not to get philosophical, had kind of a different meaning and a different impact and took different times out of my life. Maybe the most meaningful mandate I ever signed was when I set up my own firm and got a mandate 2 weeks into it with a very small monthly retainer. And after having signed, thousands of mandates and credit agreements for large institutions, when I walked out of the office of a small boutique where I sat down with the CEO and signed under my own firm's name a mandate, I left the place and I was literally in tears.
Wow.
I could start because it was so meaningful. So, because that was actually much more meaningful because, wow, you see your own name. I sent a screenshot to my wife, to my former colleague, said, yes. So that was in a way a transaction.
Yeah.
That got me. So that is very different, than having been on transactions, where you had, multi-jurisdictions where we brought in, so transaction I remember we worked on in the Caribbean for a storage facility with a, Hong Kong-based sponsor that we, sold to Korean investors and Caribbean investors. And the firm at the time didn't want to, for reasons that I can't really go to in public, didn't want to hold any risk. So, but the only way to kind of conclude the transaction was to take the last 30 million that we hadn't placed as underwriting, and we had to sell it, I think, within 60 days. And I kind of put my head on the line to say, yes, we can do this. I know it was a high risk thing because it was risky and it was very, and we had to sell. And it was one of those, talk about a nail biter. And I got a call every day, from the head of EM, from the head of credit, where are we? The head of compliance, where are we? So the stress was, ginormous. And then literally, I think on the evening of the last day with the underwriting period, and people got really nervous and got really pushy, and I got the call, and I back channeled, with the investor that we had in the Caribbean, and literally said, where is it? What is, no, it's not good, but yeah, about one more committee. And literally, I think on the evening before the underwriting limit, where, probably, they would have marked down the position and, shouted even more at me. We got the call, hey, we got it approved, let's print, And I remember I was actually on my way to London, sitting in the airport lounge. And, I just went to the bar, opened a beer, said, we did it. But again, it's not a meaningful, it's a meaningful transaction. It's one of these things, as I get older in the larger scope of my life, nobody's going to stand around my graveyard and say, we're so glad Michi sold that position. But in this moment, you're really, it's like you're in there and calls at night and midnight. But it was like this, we did it. Yes, because I put my credibility on the line with it as well. So that was meaningful. I could give you plenty of war stories here, but that's one that comes to mind where I say, because there was all this tension, then we did it. Let's go.
All right. How do you compare the workload in syndication to investment banking?
Wow, that's another 12 episodes. So it's much more transaction driven. And again, I say it one more time, I'm a bit of a cynic about it. I think the workload in investment banking is inherently poorly managed.
I agree with that.
And it's inherently kind of, the abuse becoming the abusers, not very efficiently.
Yes.
done. So, assuming that this is the model and it still prevails, and we could debate this model again, that's a whole other series, in syndication, it's much more, transaction driven. Like when it's game on, it's game on. We got to sell the risk, set up the bank meeting, call up the people. So it's a very intense period, But then if there's no deal in the market, it's a little bit kind of more casual, So it comes kind of, more in waves. It's deal driven,
Yeah.
And so it's somewhat different, And there is not always this constant, like in investment banking, particularly junior level, where, unless, you are whatever, work 80 hours, you're not worth it. And it's also, for me, always been a matter of personal style. I've never believed in keeping people there at midnight and call them at 6 a.m., have you done it, just because.
Yeah.
It's not been my style. I think it's counterproductive. And it's not that you get more done by working this way, it's work smarter, not harder. So again, that's my personal perspective. I cannot speak for the entire industry.
No, perfect. Anything else on transaction that's worth sharing with the public?
Well, it's often the transactions. I think it's almost interesting to follow them. They take always their own life. I remember like one restructuring I once worked in Mexico, and I was, I was brought in late in the game, and all of a sudden you realize that often transactions get done again on the personal level. There were a lot of egos on the top and the big guys, and then one evening, whatever the not the CFO but the treasurer was, of the company called me at home, said, Michi, can we kind of see how we can get this done? And all of a sudden, the deal did not get done by the big egos, but it actually got done by reasonable people speaking behind. They said, okay, let's see. And again, that's where, on the transaction level, it's often at the people level, Do I trust the person? It's so important, it's so important. And it's a people's business where behind the door, or behind the scenes, you talk to people, let me just call them. Let's not create big drama, but let me find a way of getting it done, And that's actually how, particularly, the dicier situations, they don't get done by big egos. They get done by people talking and see what we can do.
I love that. And I want to hear your perspective on artificial intelligence, because there's a lot going on in artificial intelligence. And there's a couple of bankers that believe, our job is going to vanish. The markets will not need us anymore because, everything you do, artificial intelligence can do. I don't believe that. I believe that investment banking is a people's game. I need to read my client. I need to make an interesting proposition that suits him, but also fits the strategic goals of the other side of the table. We have to compromise. I have to look for this balance. And I just don't see that being done by artificial intelligence. And in order to develop people that are able to manage these issues, I need to train them from the bottom. I need, junior analysts growing to associates, growing to VP, accumulating experience, living through different deals. I know I can, upload on whatever large language model that you have, all my transactions, what I've done, but it's always a people's deal. I need to interact with people, and unless there's an artificial intelligence on the other side of the table making those decisions, which I don't believe we'll get there, I need a human on this side. What is your perspective? Am I making any sense here?
We've got another 12 episodes coming forward in the near future to you. Let me try to be succinct about it. There's room for artificial intelligence for certain things, but it's only as good as plausibility, kind of checks it, And yeah, maybe, the making of PowerPoint presentations
Will be easier.
will be easier.
Yeah.
Fine. Maybe certain research functions
Definitely
can be made easier. It's like there's a room for it. Setting aside that we haven't solved the energy to create all this artificial intelligence, but that's again another 12 episodes. But so I think there's a room for it. But I totally agree. At the end of the day, and maybe artificial intelligence is also so all-encompassing. Maybe certain trading functions. When we talk about whatever markets, certain trading functions, there might just be platform to platform, and hopefully you've got somebody still making sure
just monitoring
that there's some plausibility checking. I think deal making, again, maybe some of the input for starting people to think about this. Yeah, yes, there is room for and can take over certain functions, but I agree for the foreseeable future. A deal gets done by people, talking to each other. I give you an example. A few years ago, I was working on a transaction, and a guy who I'd worked with many times, and we're still friends and still talk, even in my afterlife, after big corporate, said, Michi, we got it approved, but I won't be able to send you a commitment letter until 2 days because somebody's out there. Please put me in the syndicate. And I said to him, Juan Pablo, don't you worry. Your word. I don't give a flying whatever about your letter. Your word. If you tell me this is done, then we do this. This cannot be replaced by artificial intelligence.
Yeah.
Artificial intelligence. Client says no commitment letter, we should not accept it. But there's a human component. And guess what? This led to many more things because the guy remembered, Michi trusts me. I knew he came through with it. I took a bit of a risk, but I didn't, but the judgment, So I think in deal making, at the end of the day, particularly when it gets more complex, well, I need a little bit of this. I need a little bit of this. Well, can you wait a little bit? This is not going to be, I don't know, I don't know. Never know. But for me, in the foreseeable future, deal making, and I don't know much about, I would imagine M&A the same, but in putting bank groups together, where again, it's so important who you speak to, that the person, trusts you. People have told me, it's actually funny that you're involved now. Okay, we'll take a look now. And that's not because of me, but I built trust with people over time. And I don't think AI can build trust, And as I always say, let's first overcome human stupidity before we completely rely on artificial intelligence.
I love that. One last question on this section. When I'm talking about financial markets to the students, I like saying that the financial markets is essentially the same it was 100 years old. Like we do M&A the same way we've done M&A in the past. I believe we do credit in the same way we do credit. We have done credit in the past. Of course, the market's more sophisticated. Of course, now we have Excel spreadsheets. We didn't have that 100 years ago. But in the same, like in the essence of doing transactions in the financial markets hasn't changed. People still buy and sell stock. People buy and sell companies. We do share purchase agreements. We do loans. We syndicate loans. How much did syndication essentially change over this 20 years or 25 years?
I agree with you. The fundamentals are the same. The financial markets, there are so many aspects to it. There are certain markets I will never understand, and they're far too sophisticated for me. So I cannot speak to all markets.
All right.
So, it's always hard, to speak the financial markets because they're very, exotic option tradings. I don't understand the first thing about it. Yeah. And I cannot tell you whether they have changed or not, Certain markets that I'm familiar with, yes, I think the fundamentals still, you have to have a sense of credit. You have to have a sense of who does what and who comes in. I think I mentioned earlier, I think what has changed, it's, transaction, a lot of particularly assessing market capacity or interest. And I would maybe similar in the M&A markets and others. has become a much more transaction-specific consideration. It's not, to come back to my example, 3 times levered mining company, $100 million EBITDA in Peru. These are the 20 global players. They don't exist in that form anymore.
Yeah.
So it's become much more. In a way, it's a continuation of the theme. Yes, it's still a market analysis. Who does what and why do people look at it? But so it's evolving. But the fundamentals, I agree. They're still. Some players come, others players go. 5 years ago, Deutsche Bank exited emerging markets. They would publicly deny that, but I dare to say it. Now they're coming back.
Yeah.
Okay, so that's that's almost a little bit kind of variation and noise on the margin. The fundamentals are still the same. So people will need credit. Not all credit can be provided by the locals. If you talk about, say, Latin America, then at times you have new players come in, whether it's insurance companies, some private credit. There's always been the talk about, the Asian bit. Well, the Asian bit is much more differentiated, just because, all of a sudden half of the league tables show China. Well, that's policy loans. Really, day to day, it's not really that much, So there are always players that come and go, but the fundamentals, the trend, it's a pretty steady business.
In emerging markets, it is even more critical that we have so few women and Black people in the financial markets. So that's why we created You in Banking. You in Banking is a 100% free education program targeted at Black people and women that aims at working in the financial markets. There are 9 steps. So they have to train 9 different courseworks in order to be selected to a 10th program, where we work with only 25 people on site over 4 weeks to prepare them to excel at the financial markets. Our goal is to get all those people at the same level, at the best candidates in the market, interviewing for a position in an international large bank at Faria Lima, and be selected because they are good, because they are going to be excellent employees. Learn more about You in Banking at the website here on your screen.